Is it smart to buy stocks with the S&P 500 at an all-time high? This question lingers in the minds of many, from the seasoned investor to the greenhorn just stepping into the world of stocks. Drawing from the annals of history, this video will analyze the S&P 500's historical data and provide a clear answer to this question. Picture this. The year is 1982. The S&P 500 index, a benchmark for US stocks, is at a then all-time high. Investors grapple with the same question we're asking today. Fast forward to today, over 4 decades later. If an investor had decided to jump in at that all-time high in 1982, they would have seen their investment grow more than 20-fold. But wait a minute, the S&P 500 has hit many all-time highs since 1982. What if we bought at those peaks? Taking 1999 as an example, the dawn of a new millennium saw the S&P 500 at another all-time high. An investor who bought at this peak would have had to wait over a decade to see any significant returns due to the dot-com bubble burst and the financial crisis of 2008. However, fast forward to today, and they'd still be sitting on a return of over 100%. So, what does this tell us? Simply put, timing the market is a gamble. Even the most experienced traders struggle to predict market highs and lows accurately. On the other hand, investing with a long-term perspective, regardless of whether the S&P 500 is at an all-time high or not, has historically resulted in substantial returns. However, it's also crucial to remember that past performance does not guarantee future results. While history shows us that investing in all-time highs can be profitable in the long run, it doesn't rule out the possibility of short-term losses, or even long-term losses in some cases. Hence, it's always wise to consider other factors such as your financial situation, risk tolerance, and investment goals before making a decision. In summary, buying stocks when the S&P 500 is at an all-time high can be a smart move, but it's not without risks. History shows us that long-term investments, even at all-time highs, have typically yielded positive returns. However, short-term market fluctuations can still lead to losses, and there's no guarantee that future performance will mirror the past. As always, it's crucial to consider your personal circumstances and consult with a financial advisor before making any investment decisions. So, while the S&P 500 reaching an all-time high might seem like a red flag to some, history paints a somewhat different picture. It seems that the answer to our question is not a simple yes or no, but rather a more nuanced "it depends." It depends on your perspective, your patience, and your ability to weather the storm of market volatility. After all, the stock market is not a sprint, but a marathon. And as with any marathon, the key is not just about starting, but persisting till the end.